Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Thursday, June 23rd. Stocks on Wall Street are picking up where they left off yesterday, in negative territory. Investors grew more concerned about the health of the U.S. economy this morning, following a disappointing report on the labor market. 429,000 Americans filed for first-time unemployment benefits last week, up 9,000 from the previous week and much higher than expected. In addition, the number from 2 weeks ago was revised higher. Meanwhile, the moving average of jobless claims, a more accurate gauge of employment trends, held steady at around 426,000. Economists say that figure would have to remain below 400,000 for an extended period for the job market to be considered healthy.
Yesterday's decision on monetary policy by the Federal Reserve also continues to weigh on investor sentiment around the world. As expected, the central bank held interest rates steady at historic lows between 0 and 0.25%. And the Fed affirmed plans to end its second round of quantitative easing next week. But at his press conference following the decision, Ben Bernanke offered no indication that he's prepared to begin a third round of asset purchases. In addition, the Fed lowered its outlook for U.S. economic growth this year once again. The midpoint of the forecast is now 2.8%, down from 3.2% in April and more than 3.6% in January.
The downbeat economic news has investors flocking to relative safety in the markets. That's pushing the yield on the 2-year Treasury note down to a record low, and the 10-year note is now yielding well below 3%. The flight to safety is also boosting the dollar this morning. It's up sharply against the euro, yen, and other major currencies. And that, in turn, is driving down commodities. Gold is falling about 2% to around $1,525 an ounce. And oil prices are tumbling all the way back near $91 a barrel. Another big reason for that drop in crude oil is a boost in supply. The International Energy Agency said it will release 60 million barrels a day into the market from the global strategic petroleum reserves. The move is aimed at offsetting the disruption in Libyan supply since fighting began in that country earlier this year.
On the corporate front, we're seeing big gains in shares of Pfizer and Bristol-Myers Squibb. The two pharmaceutical firms announced a successful late-stage trial of a new blood thinner that they're jointly developing. Pfizer is jumping 3% on the news, and Bristol-Myers Squibb is soaring more than 5%. Drugstore chain Rite Aid is also sharply higher in early trading, after reporting a narrower-than-expected loss in the latest quarter. But ConAgra is among the day's biggest stock decliners, down 3% right now. The packaged food giant reported fiscal fourth quarter earnings that were roughly in line with estimates. But ConAgra said that higher input costs and difficult economic conditions will cut into its bottom line going forward. That's the latest from Weiss Research. Have a great trading day.